who really boosted the fortunes of America's middle class?
Both parties love to claim credit, but the truth often lies in the data, not the slogans.
We'll dig into the facts behind Donald Trump's and Joe Biden's economic records. We'll examine their major policies, check real-world results on jobs, wages, and living costs, and hear what experts and polls say. By comparing metrics like median income, unemployment, inflation, and housing costs, we'll see how each administration's actions affected middle-income families. In the end, you'll have all the evidence to judge for yourself who, if anyone, helped the middle class more. President Trump promised big changes. His signature law was the 2017 Tax Cuts and Jobs Act (TCJA), which slashed corporate and individual tax rates. Trump argued this would spark growth from the top down, saying lower corporate taxes would be fantastic for the middle-income people and for jobs. On top of the tax cuts, the administration pushed deregulation in industries like energy and finance and engaged in aggressive trade policy, tariffs on China and other trading partners. The stated goal was to boost U.S. manufacturing and wages at home. Trump also touted policies like expanding opportunity zones and promised to reduce regulations on businesses.
We could display charts of effective tax rates or overlay headlines from 2017 to 18 about historic tax reform and Trump's job claims.
For example, a side-by-side graphic might show the federal corporate tax rate falling from 35% to 21% versus what happened to median incomes in those years. Benefits to the middle class, alongside economists' warnings that most gains might go to the wealthy. Digging deeper. Under Trump, the child tax credit did increase from $1,000 to $2,000 per child, a clear benefit for families. However, this was a one-time jump, not a permanent expansion. Importantly, the TCJA provisions for individual middle-income taxpayers were set to expire in 2025, while the corporate cuts are permanent. So, observers warned that some middle-class cuts might vanish later, unless Congress acts again. Also, Trump repeatedly vowed to rebuild infrastructure. But major bipartisan infrastructure bills did not pass under his term. Only small bipartisan measures and private sector projects moved forward.
Before COVID-19 hit, the economy under Trump generally did well. Unemployment fell from about
7% in January 2017 down to around 3.5% by late 2019. And matching the lowest level since the 1960s. Wage growth remained positive but modest. After inflation, real wages rose only about 1.9% in 2018. Median household income also climbed, from roughly $61,000 in 2017 to about $68,700 by 2019. If we adjust for inflation, income growth was smaller, but still roughly flat or slightly up. Even so, many economists note the baseline effect. Trump inherited a growing economy from the Obama years, and much of the pre-pandemic growth was a continuation of that recovery. In 2018, GDP grew 2.9%, near Trump's 3% goal, but growth slowed to 2.3% in 2019.
Consumer spending and investment stayed healthy, but not dramatically higher than trends.
A major upshot was the federal deficit. Combining tax cuts with higher spending, including a big defense budget increase, added about $113 billion to the deficit in FY 2018, a 17% jump. Over 10 years, the TCJA was projected to cost roughly $4.6 trillion in lost revenue.
Before any dynamic offset, adding to the national debt.
In short, Trump-era policies coincided with tight labor markets and rising nominal incomes.
The official congressional research is cautious. It found that after accounting for methodological flaws, the literature as a whole does not provide support for significant effects of the Tax Cuts and Jobs Act on the economy.
That is, experts see only modest gains from the tax cuts. Some analysts, including left and right-leaning ones, report that much of the corporate tax savings went into stock buybacks and dividends, not new hiring. Indeed, between 2017 and 2022, top U.S. corporations spent record amounts around $1 trillion per year on buybacks, benefiting shareholders. Wages and worker benefits did rise, but comparatively slowly. By late 2019, before the pandemic, wage growth had actually slowed down to under 3% nominal, partly because the labor market was full, with few unemployed workers left.
Critics argue Trump's policies skewed toward the rich.
For example, The Guardian reports that because the TCJA cut rates at the top, the highest earners got far bigger dollar tax cuts than middle-class families. Even Republicans pushing to make the cuts permanent Acknowledge the big winners were already wealthy Americans. Economist Joseph Rosenberg of the Tax Policy Center sums it up. Most of the good quality evidence we have suggests that any economic effects on the economy were relatively modest. Others note that in 2019, wage growth had already slowed, and much of the growth in tax revenues since the cuts came from inflation and pandemic recovery rather than the law itself. There's also the pandemic shock. When COVID-19 hit, unemployment soared to a record 14.8% in April 2020, by far the worst since the Great Depression. The Trump administration did pass the CARES Act in March 2020, with broad support to send $200 checks to individuals, boost unemployment benefits, and aid businesses. That emergency relief blunted the impact for many families, but this was bipartisan policy, not unique to Trump. Still, critics say the economy was still fragile by late 2020. Unemployment was 6.7% in December 2020, and many middle-class families faced crises, evictions, debt, lost jobs. Controversially, Trump also bet heavily on tariffs as a revenue source to pay down the debt. In reality, estimates showed fully implementing Trump's promised tariff increases, including on imported goods and imports from China, would at most raise a few trillion over a decade, far short of the tax cut costs. Moreover, tariffs act as taxes on consumers. Analysts warned that widespread tariffs would raise prices for average families by up to $2,800 on food and everyday goods. Retailers like Walmart even warned that higher tariffs would likely be passed on to shoppers. In practice, much tariff talk was paused or scaled back, but uncertainty around trade policy added complexity for manufacturers and retailers. President Biden took office amid crisis January 2021 and pushed big government solutions. The centerpiece was the American Rescue Plan Act (ARP) of March 2021, a $1.9 trillion relief package. ARP included direct $1,400 stimulus checks to individuals, extended unemployment benefits $300, weakened amid 2021, and a crucial expansion of the child tax credit, increasing it up to $3,600 per child under 6, $3,000 for older children, and making it fully refundable with monthly payments. It also poured money into vaccine distribution, small businesses, PPP loans, state and local budgets, and an expansion of health insurance subsidies COBRA, and more generous ACA premium tax credits. In short, ARP aimed to lift working families with cash relief and invest in public health measures. After ARP came major investment bills. In late 2021, the Bipartisan Infrastructure Investment and Jobs Act (THRUJA) committed $1 trillion for roads, bridges, broadband, and clean water, creating construction and engineering jobs across the country. In 2022, the Inflation Reduction Act (IRA) passed, focusing on climate and healthcare. It invested in clean energy jobs, extended tax credits for green tech, and notably extended ACA premium subsidies and capped insulin costs for seniors. Biden also oversaw the passage of the CHIPS and Science Act to boost semiconductor manufacturing, subsidizing chip plants in the U.S., as well as efforts to raise the minimum wage for federal contractors, though $15 full federal increase remains stalled in Congress. His administration also launched an expanded child care tax credit, child and dependent care credit, and tried, unsuccessfully due to the Supreme Court, to cancel student loan debt, which middle-class families heavily care about. In sum, Biden's middle-out philosophy was to invest directly in families and communities. Bigger child and family benefits, infrastructure jobs, and healthcare help. He also touted focusing on union jobs. IIJA was framed around union labor, and claiming that the wealthy would contribute more via tax enforcement rather than cutting taxes. In fact, Biden did not raise tax rates on most middle-class workers. He left the 2017 individual cuts in place through 2025, but increased IRS funding for enforcement and some taxes on billionaires and corporations, such as a minimum tax on book income for big firms. What happened after Biden's policies hit the streets? First, the job market recovery was very rapid. ARP passed in March 2021. By November 2021, total employment had already surpassed its pre-pandemic peak, roughly 31 months faster than it would have without ARP. According to the White House, unemployment fell from 4% in Jan 2021 to 3.9% by December 2021, then to 3.5% in late 2022, matching Trump's best. In fact, the US,
regained all the jobs lost to COVID by mid-2022, one of the fastest recoveries on record. Biden's administration points to economic growth and jobs as a success. Independent analyses, e.g.,
Moody's estimated that 2021 GDP growth would have been 3% without ARP, but actually came in at 7%, one of the fastest expansions in decades. The ARP's large stimulus clearly buoyed consumer spending and business confidence in 2021.
Median household income also jumped from about $68,000 in 2020 to over $80,600 by 2023, a record nominal high. And, by one important measure, poverty fell sharply. Thanks largely to ARP's expanded child tax credit and other aid, the Census Bureau reported that child poverty plunged 46% between 2020 and 2021 to a record low of 5.2% under the supplemental poverty measure.
This indicates many middle-class families with children saw a tangible benefit from Biden's pandemic relief. However, this era also saw a dramatic rise in inflation. From 2021 into 2022, prices surged worldwide due to pandemic-related supply issues and the Ukraine war. But US inflation was especially high. By late 2021, the Consumer Price Index had already jumped 7.0% year over year, the largest increase since 1981.
It peaked around 9% in mid-2022, and year-end 2022 inflation was about 6.5%.
High costs of food, rent, and energy squeezed middle-class budgets. Supporters of Biden argue that much of this was due to global factors and that inflation started rising before ARP was passed. Critics counter that the massive stimulus overheated demand.
Notably, by 2023, inflation slowed sharply to about 3.4%. Yes, meaning price growth was moderating closer to historical norms. Inflation is now down, but still elevated, Treasury Secretary Janet Yellen and others point out.
Many economists credit Federal Reserve interest rate hikes for reining in price growth without a major jobless spike. Indeed, the unemployment rate stayed historically low, around 3.5 under 3, 7% through 2022-2023, refuting earlier warnings that high inflation would require a deep recession. The Washington Post notes that inflation has plummeted from 9% to 2% with no discernible jump in unemployment, and a turnaround even critics like former Treasury Secretary Larry Summers didn't fully expect.
Meanwhile, real wages after inflation, saw mixed results. Data show that nominal wages rose in 2021-2023, but inflation took much of that away from many workers.
By one report, during this period, low-income workers saw the fastest real wage gains, in part due to labor shortages pushing up pay. Though they started from low bases, middle-income real wages were roughly flat. Housing affordability continued to worsen. Home prices and rents surged in 2021-22, driven by low mortgage rates and demand, making it harder for middle-class renters and buyers. By late 2022, the average U.S. home price had jumped by about 20-30% since 2019, even adjusting for inflation. That hike has been partially offset in 2023-2024 as interest rates rose and home price growth leveled off. In healthcare, Biden did manage to lower the uninsured rate. The uninsured population fell from 9.9% in 2020 to 8.3% in 2021,
thanks to extended Medicaid enrollment and ARP's more generous subsidies.
This was a continuation of a trend from 2014-2020 under the ACA overall about 1 million more people gained insurance from 2020 to 2021. That means more middle-class families had coverage, often through expanded Medicaid or marketplace plans. The uninsured rate ticked up a bit in 2022 as some pandemic benefits ended, but in 2023, the trend reversed again with more signups on the exchanges. Biden's record is far from uncontroversial. The biggest gripe among critics is inflation. As economist Larry Summers warned in 2021, the ARP was too big and risked fueling inflation. In 2022, Summers and others argued that only sharp cuts and higher unemployment would tame price growth. Supporters say those critics overstated it. Indeed, prices have come down without a collapse in jobs. But on the ground, middle-class shoppers felt hurt by rising gasoline, food, and housing costs in 2021-22. Polls show that many Americans blame Biden for high prices, even if root causes were partly global. Another criticism, higher deficits and debt. The ARP and subsequent bills were paid for by borrowing, adding trillions to the national debt.
Deficit hawks argue these investments make future bills, and taxes or inflation more likely.
A Brookings analyst noted that Democrats are split on ARP's legacy. Some say it was necessary, others that it was too big, given the political backlash from inflation.
If economic discontent costs Democrats elections, critics say, that will be a cautionary tale.
Some say Biden's policies haven't specifically helped the middle class, but rather provided broad social support.
For instance, the expanded child and family credits mostly helped the poorest families, who were already under the poverty line, rather than the established middle.
When the enhanced child tax credit expired at the end of 2021, child poverty spiked again in 2022, raising questions about the sustainability of those gains.
Critics on the right paint Biden's agenda as welfare for the rich too, citing corporate subsidies, like in the clean energy bill, that also benefit large companies.
Meanwhile, some left-leaning critics point out Biden did not raise the corporate tax rate as he promised, relying instead on IRS enforcement to collect more revenue. Finally, political critics, and some economists, fault Biden for not fully controlling the labor supply issue during the pandemic.
Generous UI and stimulus arguably kept some people out of work longer, though studies found those effects were modest.
And the supply chain disruptions that drove inflation were not directly solved by policy. Indeed, they stemmed from factors like factory shutdowns overseas. So some argue that despite good intentions, Biden's choices accelerated inflation without changing those supply constraints. Let's put key numbers side by side. We'll focus on the middle class, often defined around median household values.
Median income. Under Trump, median household income rose from about $61,000 in 2017 to $68,700 in 2019, pre-COVID.
It dipped slightly in 2020 with the pandemic, then surged to $80,600 by 2023. That's a nominal gain for Biden's years, although inflation consumed much of it.
Real, inflation-adjusted median income was roughly flat in 2017-2019 and only recovered to 2020 levels by 2023. A chart here could show median income over time with shaded recession periods. Unemployment. Trump inherited Chapter 4.
7% unemployment, and drove it down to 3.5% by early 2020. Historically low. It then spiked to 14%. 8% in April 2020 due to COVID under Biden. Unemployment fell from 6.4% Jan 2021 to 3.5% by 2022, and stayed around 3.5 to 3.7% through 2023. Investopedia notes the average rate was 5.04% under Trump versus 4.80% under Biden. So by this measure, both presidencies saw very low unemployment. Again, remember the big pandemic effect straddles the two terms.
Inflation, CPI. Pre-COVID, 2016 to 2019, inflation was stable at 1.5 to 2.5% annually.
Under Trump's term, it averaged about 2%. Under Biden, it shot up 7.0% in 2021, 6.5% in 2022, then fell to 3.4% in 2023. A bar chart could dramatically illustrate the jump. This has huge middle-class impact, since fixed incomes and debt payments don't. Real wage growth. Throughout the 2010s and early 2020s, wage growth, adjusted for inflation, was historically weak. Under Trump's expansion, real wages grew by less than 2% per year. Under Biden, nominal wages rose, especially as labor demand was strong, but high inflation often left middle earners still struggling to see net gains. By mid-2023, real average hourly earnings for production, non-supervisory workers were only a few percentage points above 2019 levels. Poverty and inequality. One success story under Biden was child poverty. Census found it fell to record lows in 2021, 2% by the supplemental poverty measure, thanks to relief programs. Overall poverty, for all ages, also hit low levels. Under Trump, poverty had been slowly declining and reached 5% by 2019, pre-pandemic. Official poverty rates for 2021 were only slightly higher than 2020, but the supplemental poverty measure, which includes tax credits, showed big drops. Income inequality, the gap between the rich and middle, continued to grow modestly under both presidents. Neither moved it back in a sustained way. Healthcare. The uninsured rate fell under both administrations. It reached a historical low, worst 6% in 2020,
and continued dropping to 8.3% in 2021. This was partly due to Medicaid expansions under Obama and kept up under Trump-Biden. Biden's ARP made premium assistance more generous, which seems to have attracted more enrollees in 2021. So, a slightly larger share of the middle class gained insurance, public or private in Biden's early years. Housing affordability, home ownership and rent affordability worsened under both. Home prices rose steadily under Trump, thanks to low rates and supply issues, and then soared further under Biden. By mid-2022, U.S. home prices were up, rising 50% from 2019. An illustrative stat: the median new house sold price hit $425,000 in 2022, compared to $354,000 in 2018. Mortgage rates, below 4% in 2021, jumped to 6.7% by 2023, making buying much harder for middle-income families. Rents climbed 10% plus in 2021-22, then began to moderate. Overall, housing cost burdens, measured as price-to-income ratios or rent share, hit decades worse levels by 2022. Beyond raw data, what do Americans think? Polling consistently shows people give lower marks to Biden on the economy. For example, a recent Vox report notes that surveys from 2023 put Trump 11 or 20 points ahead of Biden on who can better handle the economy. Gallup's Economic Confidence Index has also been much higher during Trump's term than Biden's C-chart. When asked about the most important issue, far more respondents name economic problems under Biden. The Vox chart below illustrates this change. In plain terms, while most economic indicators are strong or recovering, consumer sentiment has lagged. High-profile stories of inflation and price hikes have made voters anxious. In fact, Gallup data show that from 2021-2023, the majority of Americans said the economy was getting worse, even as unemployment was low, 64%. One commentator quipped, "The economy was good under Trump, and now Biden is blamed for what people remember from the pandemic wreckage." In swing state polls, the economy consistently ranks as the top issue, and economy versus immigration battles vary depending on news cycles, as the chart shows experts are divided on interpreting this. Some note that under Biden the economy did bounce back, and the pain of inflation is waning. Democratic pollster Fernand Amandi observes that confidence is slowly ticking up, and if trends continue, the public may credit the recovery by election time. Republican pollster Whit Ayers warns, it's hard to convince people things are better when prices still feel high. In any case, public sentiment shows clear dissatisfaction with the status quo, a key controversy. What do economic experts say? Think tanks and economists often give contrasting takes. Tax Policy Center, Brookings centrist. Many analysts there conclude that Trump's tax cuts had only a modest growth effect. For example, economist William Gale notes that post-2017, investment mainly went to stock buybacks, rewards for shareholders, rather than new factories. The TPC's Joseph Rosenberg said the evidence shows no dramatic change in the economy from the 2017 cuts. In some centrist analysts say the promised supply-side boom for workers didn't materialize strongly. Progressive experts. Organizations like the Center on Budget and Policy Priorities highlight that Biden's policies, ARP, expanded tax credits, significantly reduced poverty. CBPP noted child poverty would have been much higher without the 2021 child tax credit expansion. They credit these moves with lifting incomes at the bottom. However, they also acknowledge inflation's hit on the middle class, while arguing that much of that was due to outside factors. Conservative critics. Many on the right, Heritage Foundation, American Enterprise Institute, blame Biden for running up deficits and causing inflation. For example, the American Enterprise Institute argued that ARP's size was unnecessary and risked overheating the economy. They note that Trump's era had both low unemployment and low inflation, whereas Biden's saw high inflation even as unemployment fell, though Fed actions have since tempered prices. In 2024, GOP analysts often point to 2022's 9% inflation as proof Biden's spending spree hurt the middle class, even as nonpartisan data show inflation was peaking globally. Super forecasters IMF, Fed. Impartial forecasters generally say fiscal stimulus, like ARP, boosts growth but can add to inflation if the economy is near capacity.
The International Monetary Fund in 2023 estimated that nearly half of US
inflation was due to spending programs, including ARP, and half to supply shocks and energy prices.
Federal Reserve studies agree that 2021 stimulus likely had a modest impact on 2022 inflation, since inflation was already accelerating. In any case, these analyses suggest trade-offs. Without ARP, recovery might have stalled. With it, inflation got a bit higher.
Some data websites, EFRED, CBO, provide regular updates on all these metrics.
Pollsters like Gallup and Pew find consistent skepticism. For instance, majorities of Republicans and Democrats agree the economic system favors the wealthy, showing widespread middle-class concerns beyond any administration. Ultimately, experts caution not to assign all credit or blame to one president. As one commentary noted, economic conditions often start with the previous term's legacy. Trump rode the coattails of the 2008-2019 recovery, while Biden inherited a COVID shock. Both faced global headwinds: oil prices, China's slowdown, supply chains. So, in synthesis, experts urge nuance. Both presidents made policy choices that had real effects, but both also had factors beyond their control. So, who helped the middle class? The data show both successes and shortcomings on each side. Under Trump, the economy was strong early on. Low unemployment, rising incomes, booming markets. But much of that was a continuation of the post-recession recovery, with modest real wage gains and controversial deficits and debt. Under Biden, the economy rebounded spectacularly from COVID, with jobs and incomes coming back, and even surpassing previous peaks, while an ambitious social agenda temporarily cut poverty and pumped money into families. The flip side was high inflation and continued affordability headaches, which have eroded some of those gains. In essence, different approaches yielded mixed results. Trump's approach was supply-side tax cuts and deregulation. Biden's is demand-side spending and direct aid. Both had trade-offs. If your measure is unemployment, Trump gets credit for historic lows pre-2020, while Biden gets credit for rapid job recovery post-2020.
If it's poverty, Biden's policies had a dramatic impact on families.
If it's inflation, Trump's term was much calmer, while Biden's term saw record price rises, though now falling. We've sketched the contours of each presidency's record with middle-class Americans in mind, cited the latest analyses and official numbers, and even shown how Americans themselves feel about the economy. Now you've heard the evidence. Who was more effective? Watch the figures, hear the arguments, and draw your own conclusion.
No matter who you side with, one thing is clear. Policies have real impacts on real families. We hope this deep dive into the facts helps you see past the rhetoric.
The economy is complex, and the middle class is diverse.
Judge the actions, not the talking points, and use data as your guide.